ஏ ராசா ரைட் ஷேரிங் கம்பெனி ARASA.ca என்ற இணையதளத்துக்கு சென்று தி ஏ ராசா டிரைவர்ஸ் ஆப்பினை டவுன்லோட் செய்து டிரைவர்ஸாக வேலை வாய்ப்பை பெறுங்கள். மாதாந்தம் $4000 வரை சம்பாதியுங்கள். வணிக நிறுவனங்கள் ஏ ராசா இணையதளத்தின் மூலம் மளிகை பொருட்கள் மற்றும் உணவுப் பொருட்களை விற்பதோடு வாடிக்கையாளர்களுக்கு டெலிவரி செய்யலாம். தமிழில் தகவல்களை அறியாளையுங்கள். GTA பற்றி 40 ஆண்டுகள் அறிந்து கொண்டவரும் வீடு விற்பனை துறை ஊடாக மக்களால் அறியப்பட்டவருமான சிவா பிள்ளை. 416-854-0005. Taxi broker licensed by City of Toronto. ஏ ராசா ரைட் ஷேரிங் கம்பெனி ARASA.ca என்ற இணையதளத்துக்கு சென்று தி ஏ ராசா டிரைவர்ஸ் ஆப்பினை டவுன்லோட் செய்து டிரைவர்ஸாக வேலை வாய்ப்பை பெறுங்கள். மாதாந்தம் $4000 வரை சம்பாதியுங்கள். வணிக நிறுவனங்கள் ஏ ராசா இணையதளத்தின் மூலம் மளிகை பொருட்கள் மற்றும் உணவுப் பொருட்களை விற்பதோடு வாடிக்கையாளர்களுக்கு டெலிவரி செய்யலாம். தமிழில் தகவல்களை அறியாளையுங்கள். GTA பற்றி 40 ஆண்டுகள் அறிந்து கொண்டவரும் வீடு விற்பனை துறை ஊடாக மக்களால் அறியப்பட்டவருமான சிவா பிள்ளை. 416-854-0005. Taxi broker licensed by City of Toronto.
Recording in progress.
We had to understand the major difference between the person who became a millionaire. Millions are nothing today, today's standard. But anyway, we'll use the word billionaires. Whoever saved billions, other than real estate wealth. Real estate wealth, many people become wealth from real estate. Other than the real estate wealth, you save money and become wealth. What is the major difference between the person cannot be able to save money? I'm not saying they are poor, they are making money. I am meeting my financial industry. I meet enough people, even from the tax business as well as my financial business, meeting many people, but they are making good money, but they don't save money. The major part between the person who became rich and person cannot be able to have the financial control. The person became rich, they are taxing themselves. They're taxing themselves mean they are putting the money for themselves first. 20% of the income they had to save. That 20% give you some passive income come every month. When the passive income come, that's accumulate more and more. It's a compounding interest. Compounding interest is coming to you as an investment way. That's mean once you push, that will push more and more. That's a way. In our Tamil language, there's a saying: making the first million is hard. Second million, you don't know when it's going to come. Very fast. Maybe it takes 5 years to make one first million. Second million come in 2.5 years. And the third million come every year, maybe something like that. Okay, save. Okay, the way you can have a habit. Real estate agent, I could advise the habit. As I said to you guys, first 5 minutes, we regular conversation, we talk. Wait everybody to join this meeting. That's the reason always I talk about the $1 million question, how to make money. Today I'm telling you how to use saving money. Okay, that's a different today. Okay, save 20% for yourself. Make it. Second thing, good to have a good confidence. I make last 3 years 300,000. Then why not I can make another feature to 300,000 and push your expenses up. Don't push your expense up. Like luxury cars and bigger houses. Bigger houses are not an asset. Real estate is asset, but bigger houses are not asset. Unless otherwise, if you have a bigger mortgage, bigger houses are not an asset. If you have a smaller mortgage and you want to save up money, just bigger houses, you can enjoy your luxury features. But I can say the basic way I could tell you, monthly payment is one of the big killer for the self-employed peoples, guys. Number one point I could make it. Monthly payment. Monthly payment is don't rely on your income. Be confident to make income, but at the same time, don't rely on income and make the monthly payment. In that case, your monthly payment, you can't stop it. It has to be there. If you buy the luxury car and paying $4,000 a month for the car payment and $2,000 for the insurance and maintenance and everything is involved, that's it's say total $5,000. That's going to be fixed one. Whether your income goes up or goes down. Don't make too much commitments for the monthly commitments, but you can have a luxury life after you save money. Invest the money. If you, for example, if you want to buy, I give an example. If you want to buy a Lamborghini, for example, save 1 million. Invest the money for regular 9% interest. You can get it for the mortgage investment. 9% interest. That's going to give you $1,07,500 a month. Free money, passive income going to come to your hand. That passive income come to your hand, $7,500. If you are spending for $6,000 for the Lamborghini a month, doesn't matter. You can have that kind of luxury after you save money. Okay, that's what I would say. I'm not saying buy the Lamborghini with the cash and pay, but put the money under the passive income category side and make it. You know what is passive income means? Without you working, while you are sleeping, your hard work for the past hard work making money for you. That's passive income. Either you invest in the mortgage companies, or you invest it in our big corporation, or else you buy the house and getting the rental income, or else you are a good financial advisor. Go to there and invest the right stock and TSFA and those kind of things. I'm not saying directly for the TSFA and those are the passive income. Whatever the money you invest in the real estate rent is a passive income. Mortgage investment is a passive income. those kind of income without you working, whatever the work you did in the past, that's going to generate income. That's passive income, guys. 1 million will give you easily monthly $7,500 passive income. Imagine the freedom. I know many agents, after I told them, they did that one. They are. Even my own company, I have many salespeople are getting big passive income from every month with whatever the money they save and I'm not promoting my company, even though I promote, doesn't matter. Business, we had to ask for it. But what they are saying, you have it to become a millionaire. First 20% of the income you save it. Second thing, avoid monthly payments. Avoid monthly payment and keep the cash and use it regular way. Third, minimize your cost. Minimize your cost of spending. Count again if it is unnecessary. After you spend it, you may think, oh, I spend it waste, is unnecessary. Before we spending, we don't realize sometimes. That's kind of things we all have. We all have that kind of issues. Control that one. Invest as much possible as different portfolio, not one portfolio. Not only buying the houses as a portfolio, based on the inflation, based on the world market, based on the political stability, based on the world stability, and invest the money in a different areas. Second thing, don't work for money. The basic concept, I would say that number one concept. If you work for money, you never going to be.
Yeah.
If you work for money, you're never going to make money. You have to work. You have to love the work and you have to work. That's what you have to do. Don't count how many leaves you have to make it. Just to do. I want to make one house for every week. Doesn't matter. It's a condo, it's a luxury house. Do it because you like to sell houses. Make it that kind of mentality. Whatever the money comes, you can see end of the year. If you count the money, for example, people who have paid the T4 job, they are working class people. They work and they work for another 2 hours overtime and come home with very tired, and they're looking for the Friday. You don't make money. You can't be rich. We work. You love to work. You find that kind of mentality and work for yourself. Whatever you love, or else you real estate. It is one of the career you can find. You can. You all love the real estate. That's the reason you are here this morning, Saturday morning at 9:30 to listening this one. What I said today morning, the thoughts I giving you. Save 20% of the income. A conclusion at 9:40 now. I want to come back to this general topic. You guys come to study something, and I want to only waste time with the general topic, but those are important too. Save money 20% of your every commission check. Don't give excuse for yourself. Save money 28% and invest the money for the passive income, whatever the minimum 9% interest making. This is the right time for real estate agent. Market is down. We all know market is going to go up next year. That's a very basic. Basically, we also, even though some banks and other people maybe predict a recession and those kind of things, don't believe too much. Market, we have high chances. Market may go up again starting March, April. Buy a house for yourself and rent it out. These are the ones we had to think this morning. Save 20%. Cut your monthly payment. Don't go monthly payment. Make monthly payment come to your pocket. As I said, 1 million, you invest $7,500 every month, you can get it. It's not hard. It's not hard for real estate agent to get it in. Okay. Now we'll come back to our questions. Anybody have any questions, guys? Please call me and ask me. The next one, I'm going to go through the question, whatever we have, whatever I received this week. And after that one, we can start commercial lease, commercial listing. Commercial lease and commercial listing, and the end part we can talk about the tax saving, again the tax saving, money saving, corporate taxes. If you have a question, come and ask me now. Okay, the first question, this question actually nobody asked me. I saw it in the our WhatsApp group, either social group or homely group, for the pre-listing inspection yesterday. Pre-listing inspection report. Okay, what is pre-listing inspection report means? You are listing the property. You are calling the home inspector certified home inspector. You are telling the seller, okay, you're telling the seller to call the home inspector and get the inspection done and keeping the inspection report in your hand. That's called inspection the pre-listing inspection report. You have the report in your hand. In this report, you can keep it in the seller's house. Either after the offer, if somebody needs it, you can give them. But at the same time, you are not legally bounded for this one. Whatever the validity of the report, that's a list, the inspection company only. Is nothing wrong with that one. Make the seller understand what is the problem in the house. Make the buyer understand from that particular company. The buyer might think maybe the seller did the inspection. I don't care. I want to do my own inspection. Doesn't matter. He can do it his own. It doesn't bother. But at the same time, at least one inspection company did the inspection and you have the inspection report in the table. That's going to give some good guidance for the peoples if they go for multiple offer. If they go for multiple offer, if they cross the condition and everything, if you have the pre-inspection report, at least you have some evidence. In case in the future any cases or any of the issues come, it's good to have that one. I'm not saying it's a mandatory part. Legally, I'm not saying you have any legal issues in this one. Seller getting the pre-inspection report by himself, but the certified inspection company, that's a good one rather than a bad one. It's a good idea to keep it, especially for example, some of them ask me the similar question: can I get the status certificate for the condo? That's just a no answer, because status certificate means after the firm offer, this is the regulation for the status certificate. After the firm offer, you have to apply to the status certificate under the buyer's name. The status certificate going to be seller owned the property, but the status certificate going to be issued under the buyer's name. That's a really valid one. Some lawyers who are very serious, they don't take the status certificate if it's not issued to the buyer's name, or else it's issued maybe 1 or 2 months in advance. But in a way, the market is very hot. If you want to keep the status certificate, you can apply and get the status certificate and issue. If they cross the condition out or anything, you have it in your hand. But the status certificate is not like an inspection report. Status certificate is valid 100%. I'm talking about after the firm offer. But some cases, some agents do that one. Lawyers accepting it. We are salespeople. We have to try to make the sales. In that case, it's not a bad idea. If you are expecting the multiple offer situation and say recent status certificate, you can keep it. But I'm not saying as a broker record, that's a 100% valid one. Okay. Any question? Anybody stop and ask? Then the next one, Cummings. This question came to me from one of the agent. Can I put the coming soon sign? Coming soon sign? Yes, you can put the coming soon sign, but it's a reasonable time limit. You can put the coming soon sign and wait 1 month. No, that doesn't work out. Reasonable time limit, maybe a week time. If we are saying coming soon sign is in a week time, but you have to say coming soon. What is coming soon? This is the question Toronto Real Estate Board is asking. Toronto Real Estate Board, guys, is a very, very, very strict. I'm just moving into another topic. We come back this one. This week alone, our salespeople listed the property under the wrong category. They paid money. One agent 1,400, other 2 agents are 1,300. The sad part, they charge for the company too. They charge for the office. I'm going to sign whenever we signing the listing agreement, I'm going to put another note saying that for any violation, you have to pay yourself or seller has to pay them. Because they end up paying, office paid one person 1,400, other 2 people 1,300. I was checking the listing. We are getting only 5% commission. 1% commission agent charge, and out of 95% go to the salesperson and 5% come to the office. We don't even charge $500 for that particular deal, but we paid penalty for $1,400. We can't afford to do business like that. We have to be very careful. We will be very strict in the office, the category of the property, and we will give the disclosure saying that when if he gets forcing in a different category, Any cases come, you have to pay for the penalties. Okay, but I come to again, the Toronto Real Estate Board is very strict for the coming soon sign. You can put the coming soon, but what is coming soon? That's mean you have to put the MLS listing, and you can put the house address in the coming soon. You have to put the house address coming soon to MLS. What is coming soon? Coming soon to MLS. If you put that kind of note, they don't bother too much. Second thing, coming soon sign is a dangerous sometime. The next door neighbor, before you list the property, the next door neighbor can go and knock the door, and you are advertising everybody. Somebody go and bargain with you. Somebody go and say how much your salesperson charging it. If you're charging 1.5%, they will say, I'll charge you only 0.5% if you buy the house from me or something like that. You may lease. Coming soon sign is good to put it in my advice, after you sign the listing. After you sign the listing, for example, you sign the listing right now. Today is October 1st. House is not ready to list. Then you can sign the listing today, and you can put the listing coming up to the listing starting date, maybe October the 5th. 5 days you need to arrange the staging and those kind of things. But it's good to sign the listing first before you put coming soon sign. Okay. As I said last week, one of the salesperson put the sales sign, and he didn't put the sold sign. And after 1 month, he got charged now. He will charge the penalty from the Toronto Real Estate Board. That's not, they didn't charge for the office. That's an independent agent. He didn't put it himself. Office, they didn't charge the office, but they're charging the agent over. I forget the amount. I close to about $1,000. Kana, you remember how much money they charge? The person forgot to put the sold sign for the $900. $900 they charge for the salesperson. After property sold, didn't remove the sign and didn't put the sold board. Okay, the Toronto Real Estate Board is very strict, guys. Careful without those kind of errors. Don't make it. The next one is again we discussed this one. This coming back is good for you guys too. Condo parking, exclusive and own. What is the difference between exclusive and own for the condo parking? Condo parking mostly is coming as a own parking. That's mean you are buying the condo, we are buying the parking, that parking is your own parking. That's mean if the parking is owned, for example, you may leave the condo any floors, but the parking, for example, level 3, P3, number 421, that's mean the 41, maybe that parking is your own. You can keep the parking. Registration is going to be tight. Registration is going to be 2 different registration. If you put the land registry, you can see 1 registration for the condo, 1 registration for the parking. Same thing, locker is on, 1 registration for the locker. If you own 2 parking, 2 different registration for the parking. But exclusive mean you don't see the registration, but you can get the number, which number you're going to use. Sometimes exclusive parking, property management may have the rights to change around the parking spot sometime. You have only exclusive usage to usage. You don't, nowadays that's getting less right now. Mostly everybody is owning the parking, but the exclusive usage, you have 1 parking spot, underground parking spot in that building, but the number they give you, that number can be changed by the management if it is necessary. Otherwise, you cannot, the major different parking, you cannot sell it separately. If it is your own parking, you can sell the parking separately. Parking is exclusive, you cannot sell it. It's run with the same condo. You can see it, many buildings, they can put only the parking for the pandemic time. They put the parking 25 to 30,000, and downtown is going back again 50,000. Then separately they sell the parking. Okay, guys, that's an exclusive parking and exclusive and ownership for the parking side. The next question for the condominium townhouses. The condominium townhouses for the registration time, do I need to obtain the home insurance? My answer is not necessary, because the banks are looking for the time of the registration. Banks are looking for the fire insurance. If the fire insurance, if it is a maintenance townhouses, maintenance condo, if you see the insurance is including, you can see the status certificate and see insurance is including the time of the transaction, time of the closing the transaction, the bank, they accept the maintenance fees condos. The insurance is not a requirement, because in case of fire insurance is covered by the regular insurance policies. But the confusions come to some people for the lane fees townhouses. Lane fees townhouses comes to lane fees maybe $50, $70, less than $100. That lane fees townhouses are detached townhouses, detached properties. The detached property only snow removals and the garbages. That's only coming under the lane fees. The lane fees townhouses not including the insurance, not including the water or anything. In this case, yes, the time of the registration, they will ask for the certificate and they will view the certificate. If the insurance is not including for the lane fees, you have to have the insurance in order to register the mortgages. Okay. If you have any confusion or any question, come out and ask me because I'm here for you guys. The next one, the next question, guys. After that one, I can move to the. My client is looking for an industrial unit to convert as a Hindu temple. Oh, okay. This is a big question. Okay. My client is looking for an industrial unit to convert as a Hindu temple. How can you guide me? All right. Zoning changes is possible. First of all, there are two barriers we had to look for the zoning changes. One, the city allows certain places you can do the zoning changes. If you are looking for the industrial unit, yes, industrial unit is the one mostly people buy it and change it to either temple or what do you call party halls and those kind of things. There are some areas of special. For example, Seals Avenue. Seals Avenue, they did many amendments. Markham and Seals, for example, I'm talking about. They did many amendments saying that Seals Avenue amendments because the area was developed last 15 years ago. The area was developed. In that area, the time area was developing. They did some zoning changes for the Seals Avenue changes, and they allow many people to do the zoning changes. But the major example, I can pick it right now, 3011, 3021, 3031 Markham Road. You know the Nilgiri Restaurant Plaza, and there are 5 temples you can see, 5-6 temples, I believe. And even the industrial unit, they allow for the restaurant, dining restaurant. Nilgiri's restaurant is one of the restaurant, is a dining restaurant. The reason I picked those one, when I see the question is very close to us, and especially for the Select Avenue in Markham and the Seals Avenue, they allow for the industrial unit to make the garages and workshops, because the changes came. You can look at it where is the changes is possible. Same thing in my real estate industry. I seen Progress Avenue. They did the big changes near to the Scarborough Town Center and those areas. Progress Avenue changes the city. Those are amendments. The zoning amendments are there. In case anything is possible, there are little bit flexibilities. You can do that. But I think Seals and Markham area, Seals Avenue changes is they already block it. They already freeze that one. There's no more changes or something like that. You can check it out. But again, the question is they are not asking about the Seals Avenue or Markham, but I just pick this as an example. Yes, you can, if you're looking for a industrial unit, what you have to do first, you have to look for that area. You have to go to the city and you have to pay the money, $25, $30. What are the zoning is available for that particular building and available. You can get those one. If the city allow, doesn't mean city zoning permit doesn't mean you can have a temple. There are so many other restrictions there. For example, most of the industrial units are condominium corporations. You have to apply there what exactly condominium corporation regulations is there. Second thing, what kind of usage you're going to do. For example, it's a temple. Temple and the party hall are the worst one to get it in. The reason temple and party halls are worst one because temple, for example, the prayer time is 12 o'clock. Everyone go there at 12 o'clock. They park the car and they leave. We can see the temple, mosque and everywhere. We can see that one time only everybody park, everywhere they park and they leave. That's disturbing the other tenants and everything. In that case, the city is very strict for the temple side. But when it comes to temple side, maybe I can tell you some knowledge building side for you guys. If you want to do some zoning changes, guys, my wording, based on my experience, if you want to get some industrial unit, I want to do some zoning changes. Try to look for the main street properties. For example, Markham Road, Necon Road, those kind of properties are much easier than the rural area properties. The reason behind, for example, exactly same question that the agent sent me, picking as a temporary example. If we are going to give the notice to the city, say for example, condominium corporation is allowing you, that's fine. Then you are going to the city and doing the zoning changes, putting application. You have to put how many people is going to be that particular temple, and what are the income group of peoples. I went through certain zoning changes applications, guys. I know that part. What are the income making peoples are going to be that particular temple? What are the time frame they are coming in? What are the age group? What are the age group people going to come there? What are the times you're going to have that? But that's a temple site. What are the times they're going to have the prayer? Even the reason behind how many cars you're going to park for the parking facilities. For example, the reason I said main spot. Say for example, the temple zoning coming to Markham Road. You can say the people are living in, just picking an example close by here, guys. If somebody living in Brampton, oh, please don't get me mad. I'm just, this question, after seeing this question without preparation, I'm giving you some ideas. For example, if we're talking about Markham Road, you can see Markham Road, how many temples are there in Markham Road? I can say when Markham and Peach to Markham and 14, I can count at least 10 or 50, no more, the small temples. The reason the application, they can say, the clients based lower income peoples, they have only one car, and they have only one car. They take the public transportation. They take the public transportation and come to the temple, and they can give the statistics. The permanent members are 200 members sign up the papers, and they say they mostly take the TTC and come there, and they can say I living in the Texrock Court and Markham and Eglinton and those kind of areas, and those kind of areas. And some people can say age group of the people over 65, and we take the regular public transit and come. The application process is there. That's the reason basically I'm saying if it is in the main street, easy to get the temple zoning rather than the rural area. People think rural area is much better to get the temple because not too many people there. That's very hard to get it compared to because of the parking issues. Okay, the question the salesperson sent me. Yes. We need to give the answer just for the clients. Then only we can make money. We can close the transaction. But what we're going to do is an important part. Maybe you can start to work on something in the main road properties and the TTC access properties. And if anything available, talk to the listing salesperson. After that one, worship zoning is there or not, go to the city and finalize yourself and go put the condition of condominium corporation approval. After that, you have to go to the people who know how to get the zoning changes for the temple zoning and make the application to the city. Why not? It's possible. I know within few years, some people's bought it in the commercial units in Markham and Passmore area. Markham and Passmore area, they did the conversions for the small church groups conversions. All right, that's it for the questions so far I have, and we are going to go to now for the commercial leasing. When it's come to commercial leasing, one of the salesperson asked me about the commercial. I am not really sure he's here or not. I'm going to tell quickly what Kana to tell him to come and listen to this one. Give me guys for 30 seconds. All right, I'm going to go to commercial leases. What we have to look at the commercial lease before you go to the lease. What we have to look at the commercial lease. I'm not giving you 100% because the leasing is so much variety, so much difference are there. The basic idea I'm going to give you right now. Okay, first of all, we have to look at what kind of property we are going to lease. For example, industrial unit, retail unit, office building, what are the type of property or what are the type of building we are going to lease it for. That's one of the major part. Second thing, what kind of business they're going to run it in that particular lease property. What kind of business they're going to run it under the lease property. Based on that one, we have to look at it. For example, if you are getting the retail space and you run the pizza shop, we had to see the zoning. The restaurant zoning is there or not, and the condominium corporations are they allowing for that particular area if it is a condominium unit running the restaurant. Even though say some plazas, you can see some few restaurants and other ones are retails. The reason they allow, when the time they build, they allow only limited units for the restaurant purpose, and they have some exhausted and everything already built there. And that's the only place, only things, the only units they can run the restaurant. Other one, everything else is going to be, it's a different category. In that case, before you lease, you have to look at it, the type of the properties and the type of the business. Of course, the zoning. When you lease it, you have to ask for it. What kind of zoning is available? And but for example, medical building, dental offices, you can't get everywhere. That's only limited to certain areas. That's the only places you can get those kind of. Even though you lease the property, then you had to go to the particular areas and get the particular properties for the basic giving you. If the condominium, if the condo commercial, you must get the permission from the management. That's the important part, because they will say we already have 3 restaurants. No, we are not allowing. That's a problem. Second thing, even though condo corporation, sometimes the time the condo corporation create the condo corporation, owners ask for the exclusive usage. For example, say our 7 Eastvale Drive, our office building, exclusive usages. I have exclusive usages for the real estate office. The unit 1 was vacant for many years, the ground floor unit. One of the Senja 21 wanted to come. I objected. I said this exclusive usage only for home life. There's something like that for the exclusive usage. Here, everyone has exclusive usage. In that case, before they start one business, zoning may allow this area. You can do the real estate office building, but the particular condominium corporation may limit. Those are the ones we have to look at it for the commercial leasing side. The next one, guys, commercial leasehold properties. The leasehold properties are the right to use the property with your needs without owning the property. Because the many big companies we can see, the banks and many big companies, sometimes they sell their buildings and they release it back to people. The reason they want to keep the money for different purpose. The leasehold properties, right to use the property. We get right to use the property in our needs without owning the property and less capital. And the smart starter business people, they use the capital rather than buying the building. They use the capital to run the business first. When they run the business, they make money and use the money to buy the properties. In that case, leasing is leasing or buying. If somebody asks you whether leasing or buying, depends on the person financial side. If the person doesn't have much financial side, they can lease it for few years and they can make money. After that one, they can buy it. In that case, leasing is not a bad idea. But if you sell it, you may make more money. But when it's come to leasing it, the purpose of the leasing is keeping the capital for the other purposes. The next one, rent. We are going to compare the term rent versus lease. We always see the rent. Commercial, residential side, we are using the word rent, and commercial side also sometimes we use the word rent. If it is a fixed rent, we are collecting it under the term. And mostly the word we use for the commercial purpose, we use the word lease. What are the difference between the rent and lease? Both are some owners, different owners keeping the property, landlord own the property, and tenants are using it. But the major difference for the rent and lease, rent after the term is an auto renewals. There's auto renewal clauses there, either commercial or residential, if the word we use for the rent. Commercial is different. Residential, we have the residential tenancy, and Residential Tenancy Act and everything's there and giving more rights to the tenants and everything because the shelter, the tenants are living in the shelter. If they're not in the shelter, landlord cannot use it. There are so much restriction and the Landlord and Tenant Act and everything. That's different, guys. I'm not going to that part. I'm in the commercial side, but the comparison I'm giving you, rent and the lease. Rent, if it is expired, if you have a rental agreement, if it's expired, is automatically renewed. When is the automatic renewal period? Only 30 days. But until the landlord and tenant renew again, is going for monthly basis, either residential or even commercial. And commercial is a strict contract. Commercial leases are, sorry, not commercial alone. Commercial can be rent too. The lease agreement compared to rent, lease agreement is a contract. What are the contract we sign? That's the one we're going to use it. Even the lease, sometimes you can see it. Maybe some they put the example in the Wendy's as an example. American. I was looking the website yesterday. American website. They're putting the Wendy's as a mostly the area of the Wendy's area. They are not owning it. McDonald's mostly they own. I am not going to deep on those separation, but you can see somebody's land. They build a restaurant and give it to them to run it out. Maybe you can see it maybe 15, 20 years or even 50 years. They're going to lease it out and running the business in the same location. That's going to be years and years and years and years for the lease sometime. Okay, when they mark it 50 to 100 years, even some business are leasing it out the promises. Even one of the other examples, Shoppers Drug Mart, you can see it, custom build your own. The land is leased and they're building it. Somebody building it and give it to them to other lease. Different category are there. The basically saying the regular in our standard commercial leases are contract. How many years contract? Mostly you go for 3 years lease or 5 years lease. When you go for 5 years lease, you may put a clause saying that one option to renew another 5 years or option to renew another 5 years. If there is no demolition there's no demolitions come to that area, you have the first priority. First, you reserve the rights to continue to stay in the business. The reason, if you are a commercial lease owner, if you get the place, what you are looking for when you sell it, you want to sell the business. Why? You want to build up the royalties. So you want to build up the royalties in the place, and you want to sell it as a sale of business. Even some restaurants and everything, leasehold properties, sell it for 500 to 1 million even because of the income they are making it. That's called sale of business. Even regular grocery store, we sell it for $100,000 to $200,000 because the income they make, because the royalties they build. In this case, commercial lease, we always want the longer term one. If we are working with the tenant, but you have to look at it, the contract. Even some places, if you go and sign the lease, you can even see some 100 pages lease agreement. Some property management, they don't lease it for the regular ORIA form lease. I can tell you an example. Rishani was leasing it for 5 years ago. Her office property. I saw the lease agreement, the property management lease agreement, around 110 pages. That particular property management, that's owned by one of the bank. The lease agreement, that's mean how many clauses going to be there, how many rights they're going to keep it, that's the way some leases are. Okay, again, guys, basically saying lease agreements are contract. That contract you have to follow. For example, breaking the lease agreement. If your client is getting it, breaking the lease agreement is not easy. Breaking the lease agreement, you have to pay for the money. For example, somebody renting the place for 5 years, and they have finished the business for 2 years business, and they are finding loss or they're running loss or whatever. They want to leave. They cannot leave. They had to pay for 3 years, the 3 years money, leave without any court cases. Or else, if they are possible, they have to sublease it. That's the reason sometimes the sale of business category, you can see it some breakfast restaurants. Breakfast restaurant come for sale. They started with 80,000 to 100,000. Finally, they give it for $10,000 to $20,000 to leave because they wanted, instead of paying the lease, canceling the lease, they want somebody to take over the lease. We experienced that one in the office many times. Some restaurant people, they don't know much the business, they start mostly the breakfast business. They feel like breakfast business, anybody can cook and breakfast business is easier. After they started, I'm not underestimating breakfast business, so I'm not putting personally down or anything. I'm just giving an example, guys, because we did this on our office side. One of the deal, they started with $80,000 or $90,000, and finally they gave it for $15,000. The reason they were, at least somebody come and take over the lease, they are out of the business. Then they don't need to pay the penalty to the landlord. Another way, if you are dealing with the restaurants, you can also bargain. You don't need to go for a house. Like what are the price they put it in, you don't need to give them. You can ask for the income statement and you can bargain, and sometimes you can get a very, very good bargain because the person who is fed up or person who want to get out, there's a fixed lease is there. They want to sell the sale of business with a very, 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 very cheaper price. Okay. But anyway, commercial lease a contract. Then the contract you sign, you have to follow. Otherwise, they can take you to the courts. And residential tenancy is entirely different than the commercial tenancy. And another major difference for the residential tenancy or the rent versus lease. I don't want to bring the residential tenancy to confuse you guys. I'm using the word only rent and the lease. If somebody getting the rent, even though the commercial one, they don't have any modification available, unless otherwise they had to get the permission in advance from the landlord, because the rent is only short-term rent. If somebody getting the lease agreement, yes, you can even see somebody buy the commercial building. They don't even do anything inside. They lease it to somebody else for 10, 15 years. The leasehold improvements, they can say who is the one doing it and how they're going to write it off, the leasehold improvements. That's in the contract. That's in the contract. How much percentage landlord doing it, how much percentage tenant doing it. There are special cases. For example, you are leasing the property and do the dental office. When you are going to do the rental office, it's very expensive for the leasehold issues, because they had to bring the pipeline. They had to have sometime 200 amp electric wiring, 200 amp electric wiring, and the water drainage. Even some spa. The modifications are very expensive. In that case, the people sign the longer lease. I know one of the real estate office. The person I know who got the real estate office, and they asked for the landlord, can you do the improvements in the real estate office? And he gave the picture exactly what he needs. Landlord said yes, and they signed a fixed lease for 15 years. And if you want to break the lease, he has to pay for $180,000 leasehold improvements to break the lease. No choice. He has to be there 15 years, that particular building. Again, guys, lease, commercial lease is a contract. That contract, whatever the contract you making the office as the regular ORIGA form, there are some cases it's not enough. When you make the contract for the lease, the property management, sometimes they ask you to sign different lease for the particular building. That's very standard. Nothing you can do. You have to ask them to make the lease and review with your lawyers and sign it. That's the way we can do it. And the basic question is when you are leasing the commercial properties, there's a term you can see it: net lease and TMI. And the agents have some confusion sometimes when they calculate the commission. For example, we need to understand what is net lease and what is gross lease. For example, net lease means the money, whatever the money coming in, that directly the money go to the landlord pocket, owner's pocket. He not going to spend that money. That's the money he is paying the mortgages or his profit. If the paid off property is a profit. That's a net lease. The gross lease mean the TMI, net lease plus the TMI is a gross lease. Some listing you can see they don't separate the TMI. They put the TMI including, and they put as a gross lease. If they put as a gross lease everything together, the landlord collect the money and he is going to pay the TMI and he is getting the net lease by his. When we write the lease agreement, we have to be carefully see that one. The the major companies, everybody write the lease agreement, including this way. For example, net lease plus the TMI. TMI stand for taxes, property taxes, maintenance, property tax, maintenance, and insurance. Tax, maintenance, insurance. That's what TMI. And plus the outside, there are utilities outside, the lights, outside light bulbs or anything, utilities. That's also coming under the maintenance fee, but that's under the utilities. Maintenance including the cleaning the charges, garbage pickup, garbage throw up, and outdoor utilities. We can include that maintenance. That's why it showed in form TMI. Okay, for example, when you look at the listing, you are looking at the net lease as well as a TMI. You have to understand and you have to explain to your clients, TMI is only estimated number, estimated figure, TMI estimated. What are the TMI tax maintenance, tax maintenance insurance is an estimated number. For example, you have they're saying estimated TMI only $8 or $10 per square foot. But maybe the end, they will calculate the square foot. But imagine, for easy understanding, our office building. Imagine our office building. Look at our training center. Training center as an example. Say I own that one. I'm going to rent out to somebody else. I'm saying the TMI, for example, $15 a TMI. But they're going to do every year. I'm going to calculate the tax bill, maintenance fees, and the maintenance fees, tax and insurance. We're going to calculate. I'm going to divide by the square foot of the building and asking how much is costing me. In case it's cost less, I had to pay for the tenant. If it is cost more, we had to ask for the tenant. TMI always estimated one. TMI is not fixed. Every year the TMI, the owner who owned the property, they will send the bill to saying that one total property tax, total cost, your portion of this building, how much percentage your portion of the building, and you had to pay for the TMI. That's the way they're going to be there. Sometimes some tricky landlords, they put the TMI less, make it saleable. The property doesn't sell, doesn't lease out, less demand. They make this TMI less, but the reason look attractive, TMI is less, but at the same time, end of the year you're going to pay. Carefully ask them TMI, how much you paid last year, how much the estimated TMI for last few years. Ask that question. Okay. Again, the commission calculation, guys. Commission calculation is one of the part for our salespeople. Again, if the listing showing is a net lease, is easy for you. What are you going to do? Net lease category. Say for example, you are leasing out 2,000 square foot. Say industrial place you are leasing out. They mark the $12 per square foot. Then what you have to do your calculation, TMI, whatever the TMI the landlord, the tenants pay doesn't come under the commission calculation. If it is a gross lease, not everything come under the commission calculation. Only the net lease part only we are considering for the commission calculation. Say in this case, the industrial place, 2,000 square foot industrial place, we are getting it, and the net lease $12 per square foot. Then what you have to do? $12 per year. Then what you have to do? 2,000 multiplied by 12. 2,000 multiplied by 12 is a 24,000. 24,000. Okay. What you're going to do right now? Your commission calculation is going to be, say 4% commission. 24,000 multiplied by 0.04. That's been only $960 your commission plus HST. The calculating the commission, again, please understand, the calculating the commission net lease multiplied by the square foot. How much per square foot? Second thing, when you look at the commission calculation for the commercial side, the 1 year, they may give you the first year 3%. After that, 1% or 1.5% for the India term. And maybe you go for 5 years lease or 3 years lease. It's going to be different. It's going to be different for the commission calculation. If you go for the 5 years lease, of course, what are the money you making? Whatever the money the landlord going to make first year, second year, third year, fourth year. First year 3%, second year 1.5, third year 1.5. Something like that. We had to go for it. And another questions come for the commercial lease. The tenants ask for the free rent until they do the modification, for their own needs. They ask for the free rent. The free rent is only for the net lease. Whatever the money go to the landlord. The TMI, landlord not going to give you free for the TMI. Many agent doesn't understand and get confused with the TMI, not the TMI. Including this, they look at the gross lease and they don't want to pay. Even tenants always feel like if you are getting the 3 months free rent, why should I pay? Whatever they had to pay, only thing or the landlord can give you 3 months free or 4 months free or whatever the months free you're getting it. That's when they can give you deduction for the net lease. But the TMI is TMI. He has to pay for the TMI. He cannot say tenants doing the improvements and they had to pay for the tax, maintenance, and insurance. Okay, careful on that side. But if you are doing the commission calculation, other confusion come for the commission calculation. If you are getting the free rent for first 2 months or first 3 months free rent, your first year lease is going to be, even though you get 3% commission for the first year lease, that's only the total going to be only 9 months, not 1 year, because you are giving the 3 months, you are getting your client for 3 months free rent. In that case, the commission calculation is going to be first year only 9 months net lease, and the rest of the 4 years going to be full lease period, and the way they calculate. Second thing for the commission calculation, commercial leases, you don't get the commission like residential. Residential, once you finish the transaction complete, the cooperative brokerage pay you the commission, the standard 10 days. Standard 10 days, if not, we call them and bother them, and they may delay for the lawyer's side, they may delay different reasons. But the commercial side, you are asking for 5 years lease. You are asking for the 5 years lease, and you are asking the commission for the full commission at one shot. Most of the companies, what they do, they don't pay you first 3 months. They'll wait after 3 months. After the commercial lease, very rare we get the commission right away. They want to wait and see how is the tenants are. Are they going to keep the proper? Are they going to pay for the lease payment first and last is one side? Are they going to pay for the lease payment for another 3 months? And the tenants, how the tenants are doing it? They indirectly look at that one. If the tenants break the contract after 2 months, they don't pay. Even though you close the transaction, the tenants move out, or they doesn't move in, or anything happen after 2 months, they don't pay the commission. They wait under 3 months time to pay the commission, and sometimes they don't tell you upfront. That's the reason they wait. And other time they might say they are waiting to collect the money, the land, because the landlord need to pay for 5 years commission in one shot. Landlord doesn't have the money to pay. The landlord is collecting the money from the tenants for the lease payment for first 2-3 months, and that money they're going to pay as a commission, something like that. This happened. Some leases come option to renew, and when the time they renew, you may eligible to get the commission after 5 years. For example, you are getting the commission, you are getting the lease now. You are getting the lease for only 5 years lease. The 5 years lease is finished. The same tenant is renewing it. If you already have a clause saying that one, when the time the tenants renew the lease, you are eligible for the commission. Some property managements allow that one. In that case, if you are a professional commercial real estate agent, you look for that one. You want a steady income, right? You look for that one without doing any work. The owner, one time you lease it out, or the owner every 5 years they're renewing it. At that time, you are eligible for the commission from the landlord. That's a clause. You have to look at it and you have to put it in. If you want to collect the commission, mostly commercial real estates are doing it. And the salesperson asked me the question, actually, he want to list the property. He want to list the property and how we going to come to the pricing and the TMI, as well as how to list the property. He would the owner having the full property and he would list the half of the property. Okay, what he has to do, hopefully he is in the meeting and listening this one. What he has to do, he has to ask the landlord for the TMI first. How much taxes he paying, how much maintenance he paying, how much insurance he paying, how much the outside, this is the freehold building, how much outside utilities he is paying. He has to get that one as a TMI. And the square foot, say for example, say around 30,000 square foot, the owner going to give up, owner going to rent it for 10,000 square foot. That's in 1/3 is going there. Then based on that one, he has to calculate how much is the TMI per square foot. How much the TMI per square foot. If it is a big building, we have to go for a gross square foot and net square foot. I don't want to confuse too much. If we go for a regular freehold property and we can say net square foot and the gross square foot is equal. In that case, per square foot building, under the building per square foot, how many square foot the TMI is going to be there. The net rent based on each and every area and what are the usage is based on. For example, retail spaces are very expensive in the retail sectors and the industrial spaces are cheaper. Based on that one, we have to look at it. What is the market lease rate and what is available there, and how much is costing for your landlord? How much is costing for your landlord to carry that unit? Based on that one, you're going to set up the net lease. Plus, if it is a property, is a bigger property, and you are listing for say 10,000 square foot, you have to see how many drive-in doors are there for the truckload. How can you divide? What is the heat HVAC system? How the HVAC system is already hooked up? Do they have any separate HVAC system? If they have a separate HVAC system, maybe bigger building, they have a 2 separate HVAC system. It's already been, you can easily divide. Otherwise, it's going to be an issue for the heating and utilities issue. You have to look at those ones before you list the property. Especially for the industrial property, if you are listing for 10,000 square foot. For example, if you are listing for 10,000 square foot, you have to look for what kind of business he's going to do, how many parkings they need it, how many parking they're going to park it permanently, how many vehicles they're going to park, how many vehicles going to be in and out. You have to have all the information up front. Then only you can give the information to other company and as a listing agent. Talk to the seller and get all the information before you list the property. Get to know that one very seriously. Otherwise, after the problem. Second thing, the lawyer's review is very important. You know, then only the tenants not going to sue you. The tenant not going to sue you after you lease the property. Okay, that's one of the important part. If you have any more question, you don't understand anybody. Anybody want to ask any question about the commercial lease or commercial lease listing before I talk about the tax part? Commercial leasing. I can share with you one experience. Maybe the agent might be in our group today. She bought the property, is an office building, and that the particular offer said there is no chattel, no fixtures. You know what the bad landlord did? They already removed everything from the building and they kept it empty. Then when it's come to the argument, they said they spend money to remove those one because the offer was saying they don't want any chattels in that particular property. In that case, he removed everything. When you write it down, guys, carefully and go to the lawyers and do the lawyers review. And now I'm going to go to again for the tax saving side. I did the PREC corporation many times this particular topic, and again our members didn't ask me straight, but they asked my son-in-law, which one is better and ask some question and everything. But he told me they need to have some confusions. Why don't you do it again after the commercial lease? That's the reason I'm doing this one today. And again, any tax questions, you can come and ask me. We have good 30 minutes to talk about this topic. Okay. What is the based on the PREC corporation, based on the PREC corporation, as well as what you can deduct for the income tax purpose for the real estate agent income tax side. First, I want to go through real estate agent income tax side, what is available for you to deduct. For example, real estate agent income tax, I am going to pick up as an example for 100,000 net commission you are getting it. When you get the 100,000 net commission, I'm picking the number 100,000, easy for me to calculate and talk to you guys. When you go for 100,000, what happened? You must have the HST registration and $13,000 HST you're going to collect without doing any job. That means that 13,000 HST, who is paying you? The owner paying you when you sell the commission as a goods and services tax to the office, to you. And why they paying to you? That money you had to pay to the government. I tell you one example. One of the major Remax office. Maybe I'm in the publics and over 90 people are there, and I want to tell the name of the Remax. This is the biggest Remax. Biggest Remax. What they're doing it, either your personal or PREC. HST portion, they don't give it to you. Under your HST number, they're paying to the CRA direct. And what you had to do, you had to apply it and get it. That means you are losing your privilege of filing your taxes. They already paying you. Even Canada government giving the privilege, but that companies block it. I don't know why they block it. One of the top producing salesperson in our office, she moved to that particular Remax office, and he came to me for the help for the tax part. Then I seen it. All the HSC already paid. Then I asked why. They said that's the system they have. If you, in order to get back, you have to file it and get back. Getting back is not that easy, as you all know, right? Okay. Anyway, come back. The HST money, whatever you receive, please understand that's not your money. The seller is supposed to pay to the government. Seller pay the government rather than they paying directly to the government. Government can change the law. You can say real estate industry is not eligible to HST. That's mean seller pay directly to the government. But anyway, so far what we're doing it, they are paying to the office, and office paying to you. You collect the money. Don't ever feel like that's your money. That's the money you have to pay the government after the expenses. That's a part. What is expenses? Then what are the money commission you receive? 100,000 and 13,000 HST. Now you have two different kind of income you have. Two different kind of income you have. Please listen my word. Two different kind of income. One income is your commission income. Other income came as an HST collection. Okay. Then you had to have two different accounting system. One with HST, some expenses are including HST, some expenses are excluding HST. For example, first I talk about HST. You had to have a spreadsheet saying that one. What are the expenses you are doing it with HST? What are the expenses you are doing without HST? That means your HST filing is going to be different calculation than your tax filing. Again, your HST filing is going to be different filing than your tax filing. The reason some of the expenses are not including the HST. We are HST exceptions. I'm going to give you some few examples. HST exception. RICO insurance. You are paying the $465 RICO insurance. That RICO insurance is an expense for the tax. But HST, there's no HST. You don't need to pay for the HST for the RICO insurance. Especially car insurance again. Car insurance. You don't need to pay for the HST for the car insurance. Other simple example, 407 ETR. 407 ETR is an expense. Even sometimes costing us $1,000 per month for the ETR, right? We are using the ETR on a daily basis, say $500. $500 a month you are paying for the ETR. But check the bill. There is no HST. In that case, ETR you can claim for your tax because you are using ETR to come to the office, or you are getting the ETR to go to the clients and showing. But ETR doesn't come as an expense for the HST part. That means HST part expenses is different than your tax part. When you have an HST, you have to file the HST separately. There are two ways you can file the HST. One easy method. That's what I am using for myself too. Quick filing method. Quick filing method means you collect the HST 13%, keep the 5% for your own expenses, and pay to the government 8%. Easy. You don't have to keep any receipt or anything. They're saying you have to keep the receipt, but basically they don't want to ask you. Keep quick filer means you are collecting 13%, 5% standard you keeping for yourself, and you are paying to the government for another 8%. Okay. As an individual salesperson, that limited to now, I believe, I didn't check it today, guys. I didn't check the amount today before, but it's limited to 500,000. I believe it's 500,000. Used to be 250, now it's 500,000, I believe. If your income is go higher, you cannot use that option. But real estate business, you can use it. Some business, you cannot use the quick filer method. Detailed filing method, every real estate agents are business peoples. That's the way the government count as a business account. You had your expenses, and you had to put how much expenses you did, how much HST you paid to do this business, to make this money. That's the expenses is called input tax credit, and the balance money you have to pay for it. Don't think you are paying for the government HST. That's government money. Whatever you are getting, it feel like you are getting some extra money from the government. Okay, now the regular tax return without HST. 100,000 is your income. Without HST, you can deduct so many expenses. Number one expenses in the alphabet's order, advertisement. Advertisement is a big one for the real estate sales people, because we are spending money to advertise ourselves. We are not a secret agent, right? We are spending money. We are spending money to advertise ourselves and using it for the tax purpose. I don't want to say this openly because I don't know who is recording it. CRA have a limitation for each and every expenses. Again, Government of Canada having the limitation for each and every expenses. How many percentage maximum you can go? That's cost the reviews. If we are going to do a tax return with somebody else, they should know some ideas how many percentage they can go maximum for the reviews for each and every expenses. For example, car expenses, supplies, office expense, advertisement, meal expenses. They have some rough idea, CRA, for the different category of the peoples. When you file the tax return, there's a code, industrial code. That industrial code is going to tell the CRA officer what kind of industrial code you are using it, what kind of business industrial code going to reflect your business category. You are a courier, different industrial code, real estate salesperson, different industrial code, landscaping, different industrial code. They have a structure who can use what kind of expenses they can use it. Okay. Anyway, I don't want to tell you outside or publicly how much for the industry, for the real estate agent advertisement cost, but the real estate agent can go very high advertisement cost because based on that's our major job. We are advertising. Without advertisement, we can get it. You guys know that one, and that's the important part. Meals and entertainment, it's a very questionable period. Meal and entertainment. There are some cases CRA doesn't allow for the meal expenses. They're saying, I am an employee, I'm also I'm paying my money to eat. Then how come real estate agent, what are the money they pay? They can claim and this kind of thing. The meals expenses is tricky. If you work more than 12 hours a day, that's the law for the truck drivers. That's the law for the couriers. If you work more than 12 hours a day, the meals expenses you can claim. Even you are an office staff, if you are doing overtime, if you are working more than 12 hours, you are eligible to claim the meals expenses. $20 a day or $40 a day, you are eligible to claim the meals expenses. Okay. Anyway, real estate agent, we claim the meals expenses, and worst come to worst, they will ask you to give some proof you work over 12 hours a day, and that particular day only you use the meal allowance and this and that. Okay. Second thing, insurance. Yes, we have insurance for eco insurance, interest and bank charges. If you are keeping just one bank account, personal real estate agents are using the personal bank account. If you are using one personal bank account for that one, you can show the bank charges. Business taxes, license, and the membership fees. Just business taxes we are paying for the business tax means not the income tax you pay, whatever the membership fees you pay, and whatever the membership you paying for the RECO membership fees, Toronto Real Estate Board Toronto Real Estate Board membership fees, and the RECO insurance. And if you are a person like lawyers, they have to pay for the special licensing to get it. They can pay for that kind of membership and fees and everything. Anybody, whoever we using it, whatever the money we paying to the government bodies, we can claim those one. Office expenses, yes, you can claim the office expenses. If you have an office, either home office or personal office, you are buying the printer cartridge and those kind of. If you buy the printer, there's a law saying that when you can divide as a 3 years amortization. If you are buying the printer cartridge and those kind of things coming under the office expenses, yes, you can claim under the office expenses. Office stationery and supplies, that's coming under the stationery supplies, cartridges, pen, pencil, those kind of things you can do it. But nowadays you are using the cell phone, even though not a direct cell phone expenses, the cell phone bill, you can use certain batteries charges or phone covers on those kind of things as a stationery side. Professional fees, if you are paying the professional fees to consult with the lawyers, consult with the home inspectors, and if you are going to get the advice for the planning department, architects and everything, that's the money you can pay for it as a professional fees. Management and admin fees, if you have any managers administrating your accounts, you can pay the management admin fees. Rent is a good expense. If you have a lease sign up with any other places, you can claim the rent expenses. Real estate agent, just you can have the separate office and you can pay the rent. If you have a good income maker and you have if you sign the lease with $2,000 lease, that's the way. Hope you guys remember back, some real estate agent received the loans for the pandemic benefit, $60,000 loan. They was claiming they are paying the rent to the other places, or they are paying the home expenses under the mortgage and everything, write it off and showing as a that category, and was getting the 60,000 loss. Do you guys remember? Okay, the rent expenses is a good expenses you can claim, and simple write off for the big amounts. The repairs and maintenance doesn't come for the real estate industry. Salary expenses is one of the very good expenses for the tax saving expenses. Salary expenses, even though you don't have any business name and you have Mr. Servier, Simit Servier is his name. Simit Servier can get the payroll number and pay it for the people as a salary. The Simit Servier, he can get the payroll number. He can get the payroll number and he can pay for the salary for the employees or anybody who work. Maybe he's 21 years old son. He can work some help in the houses. They can pay for the salary and he can make the payroll. Or else he can make some independent contractors to deliver the flyers and everything if he has the payroll number. Salary and wages benefit is one of the very good write-off for the real estate agent. Learn and use it wisely. That's good write-offs. And travel expenses, yes, travel expenses you can claim only for you are going to Niagara Falls and selling the motel. That day you staying in the hotel. You staying in the hotel and showing some different motels and different areas for different peoples. You can show that one. And you are going to the Manitoulin Island and selling the cottages. You can even rent the boat. You can show that one. There are expenses. We have the receipt to show that one. Utilities, you used to be the phone bill comes separate. Now they put it as a utility side. Your phone bill, you can claim your phone bill. And motor vehicle expenses, guys, motor vehicle expenses, you can claim the motor vehicle expenses. If it is if you have the lease, if you have the motor vehicle lease, you can go up to $800 for the motor vehicle lease. If you are paying if you have the ownership, I mean financing it, you can pay for the financing interest cost plus the depreciation. You own the vehicle. The regular class 8 vehicles or class 10 passenger vehicles, whatever you're using it, the depreciation 30% of year of your vehicle cost. If you have a vehicle for $50,000 vehicle, say you buy the vehicle before June, that means that you are using the year, the full year. Before, after June is a different law. Before June, you buying the vehicle, then you can claim up to 30%, $15,000 as a depreciation for the vehicle. That's eligible. But nowadays, people are buying the electric vehicles. Electric vehicles, special classes, special category. Very first year, you can even write off 50% of the vehicle cost under the depreciation side. Electric vehicles are under the different category. We can do those one. This is for the basic for the real estate income tax and tax saving plans. I mentioned. Hope you guys understand and remember the rent and the salary. These are the good one. Third one is advertisement. These expenses can go much higher if you can have the backup. And the vehicle, yes, the vehicle you had to have the vehicle lock sheet for the vehicle. Every time you go to the real estate industry, you can write it down where you're going and what are the kilometer start and kilometer end as a vehicle lock. That's one of the important one. And based on the pro ratio, how many percentage you are using for the business, how many percentage you are using for the personal. Based on that one, you can write off the total vehicle expenses. You can write off based on the percentage. And even some agents use for the home expenses, business use of home expenses. Business use of home expenses, I don't recommend mostly for the business use of home expenses because that's one of the way we are inviting the CRA to come to your house to see where are you, what you are doing it, and those are the things for the business use of home expenses. I don't recommend too much, but still you can use it if you are using the reasonable portion you are using in your home, and you can write off the property taxes, all the bills and everything, and how many percentage you are using it. You can claim those areas. How many percent the area usage you are using it. You can claim those one for the business use of home expenses. So that's one of the part. That's keep it very minimum, very less for that part. I would say less than 5% of your income. If you are making 100,000, less than 5% is $5,000 or less. I'm using the percentage openly because that's one of the serious category. Never use it higher for the business use of home. Okay, now another 10 minutes I have talking about the PREC corporation. Now I talk about the personal corporation. When it's come to the personal business, what other money comes in for you? You have to pay for the taxes. You have to pay for the taxes based on the tax bracket. You are already working and doing the tax, the different bracket, and the tax brackets are the first bracket 0 to there are two brackets. Personal, every province is different bracket. Every federal government has a standard bracket. I'm going for the basically they're not much different, $2,000-3,000 different. In that case, I'm going the base amount. The federal bracket, roughly saying federal bracket 46,605. Let's say 45,000. 0 to 45,000, you are in one bracket. 45,000 to 93,000, you are different bracket. 93,000 to 144,000, different bracket. 144,000 to 205, different bracket. Over 205, including the surtax, different bracket. So up to first 65,000 under the first bracket, you have to pay for the government pension plan. If you are an income maker, if you are declaring the net income, over 205,000, your tax bracket is 51%, 52%, including the Canada pension. Including Canada pension, if you are declaring over 205,000 as a net income to your government, your taxes, including HST, including the CPP, is going to be 50% or more. That's one of the reason many industries fight for it and got the corporation rights. There are few organizations got the corporation right in the different years. Real estate corporation was waited too long. I have a list for the other corporation, doctors corporation and the lawyers corporation and everything, guys. The time short. I'm going for only another 8 minutes to have. I'm going to go for roughly for the real estate corporation only. The Toronto Real Estate Board, ORIA, and all the real estate members was fighting it. I remember I already signed up with 2004 for the real estate corporation. We need the real estate corporation and those kind of things. I still remember when I was working, we sent a petition to the government, and I also signed up those days anyway. Government allow the real estate personal real estate corporation October 1st, 2020. From October 1st, 2020, what happened before that one? Oria did the bigger role for this one. Ontario Real Estate Corporation did the bigger role for this one, and the real estate minister, they changed amendment. They changed the amendment for the REBA 2002. You guys all know the new name, Trust in Real Estate Act. Trust in Real Estate Act. They did the changes amendment and came to effect October 1st, 2020. After 2020, October 1st, making the corporation is your choice. It's not mandatory. You have to consult with the accountant and see whether it's worth it or not. I even seen many people having a bigger income. They didn't change it because they don't like to change it. They don't mind to pay for the taxes. Maybe they may have a different reason. Not everybody go to the same panel, but at the same time, the changes are there. You can take a huge big tax advantage. Huge big tax advantage if we have the PREC corporation. The reason what you had to do, you had to get the PREC registration first. PREC registration, you have to go to the people who know how to do the PREC corporation registration. Not all the corporations are allowed. It's a special corporation, remuneration corporation, income corporation. If income corporation, you have to go through and take the income corporation to get those one. In order to get those one, your corporation, our office system, your corporation is supposed to start with first name or last name. Then only we can identify who you are. If your corporation is 05789 incorporated in, we don't even know who is the person is. When the banks call and verifying your checks, commission checks, we need to find out. In that case, our office policy and many companies' office policy, they are using the either first name or last name, end up with whatever you want. Maybe the common name is Siva Homes, PREC is possible. If more than one Siva, government doesn't allow to register it. You may put a last name, but I'm trying to say either first name or last name we need it. And when you register the corporation, talk to them, the accountants, to review the Trust in Real Estate Act with the ORIA before they do it. I'm seeing many agents bringing the wrong corporation and arguing with the secretaries. That particular accountant did more than 200 corporations. Why you are not taking this one? And so many arguments. And I talked to Rico. Rico said, "Don't worry. If just take it and keep it. Whenever the problem comes, we will go back to them direct. Get the disclosure. You don't know anything about accounting." What I mean, please go to somebody. If you are not registered yet, you're going to register it. Who knows what to do it? And there are no business activities. We only have 5 more minutes, guys. There's no business activities with the corporation other than you receive the commission. Whatever the commission you receive can go to that particular corporation. All team members must have their own separate PRC corporation. Husband and wife, those are as a team, or else there's a one team. 5 real estate agents are working in. That every single one have to have their PRC corporation separately. We cannot have more than one person in one corporation, even though partners. We cannot have more than one equity shareholder, but we can have more shareholders, guys. In that case, you can have it. We can have your wife or the kids or anybody as a shareholder, and you can pay the dividends, reasonable dividends, and income splittings level. You can do it, but equity shareholder is only one equity shareholder. Under the article of corporation, section 5. Please tell your accountant to review and put in the restriction saying that this corporation cannot be transferred to anybody else, only you. And if you stop the business, corporation has to be demolished. But you have to have a separate GST registration, separate GST registration for this corporation. Okay, basically saying this advantage for this corporation is a many advantage. Number 1, paying the less tax. As I told you, personal tax, as I told you, if we are declaring over 200,000 income, 51%, including 200,000 net income, not the gross income. Okay, I'm talking about you are making 400,000 and 200,000 your expenses and 200,000 you are paying as a net income. Net income 51%, say 50%. Calculation easy. Go into the taxes including the HST. That's been 100,000. But the same person having the PREC corporation declaring 200,000, their taxes is going to be roughly going to be only 30,000, 15% tax. That's excuse me. That's also, guys. There are cases if you don't have any other corporation, this is the only one corporation you have. We are using all the tax benefit, 12.5% only your taxes. That's been only 25,000 only you're going to pay. Compared to 100,000, you pay only 25,000. Okay, this is one of the major tax advantage. This is another one shows the tax deferral. That tax deferral means you don't need to take it out the tax. You don't need to take out as an income everything. You can leave it. An incentive to save and increase your net worth. You can keep the money in the corporation and reinvesting. This corporation cannot receive any other income, but at the same time, this corporation can buy the property and rent it out. Those or else can give the money to the mortgage industry. Something like that, you can take the passive income side, you can do it. You cannot make earn income under the corporation, you can make passive income. This corporation is an excellent vehicle for the retirement, because you can keep the money and after the retirement, whenever you want, you can take the money as a dividend, slowly paying the less taxes. This is basically for you guys today, because this topic already did, but the PREC corporation is one of the major tax benefit for every single one. Consider and go to the Google and read more and more. If you have any question, the last question I can answer it. Okay, that's all for today. We are going to leave now. Okay, enjoy the rest of the day and make money. See you guys next weekend. It's a long weekend. I'll let you know if we're going to have a Zoom or not. We will inform you. Otherwise, if we have it, we will meet. Otherwise, I will inform you. We'll meet other week. Okay. See you guys. Bye now.